for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines. Asian markets trade with caution as earnings and the European Central Bank meeting take center stage. HUL reports a 4% growth in volumes in the quarter gone by. The country's largest FMCG player sees its profit expand the most in 10 quarters. Yes Bank will be the only Nifty constituent to come out with its earnings today. While the private sector lender is expected to post a healthy set of numbers, all eyes will be on its asset quality. A major chunk of the planned 2.11 lakh crore bank recapitalization should be spent on viable and efficient banks, according to Niti Aayog Vice Chairman Rajiv Kumar. He adds that state-owned banks should now shed their lazy banking image. Let's kickstart the show with a wrap on the action on Wall Street. US stocks fell the most in 7 weeks on Wednesday. Abigail Doolittle of Bloomberg News joins us from New York to tell us why.
Wednesday's Wall Street session turned out to be a bit bearish for the major averages in the U.S. The Dow, S&P 500, and the Nasdaq all fell by about 0.5%. Now, this was off of the lows, but even so, it was the worst day for the major averages since early September 5th. So a bit of a pause on all of the bullish momentum and the record highs that we've been seeing recently. One possible source of agitation for investors could be the fact that yields are rising, the 10-year yield above 2.4%. So investors could be wondering what that will mean for the big rally on the year. Plus some lackluster earnings reports, including Chipotle Mexican Grill, those shares falling 15%, the worst day since 2012 after the company missed earnings by 18%. We also had a disappointing report out of Advanced Micro Devices. It was more the forecast that caused the stock to fall by about 13%. Other laggards, especially in the tech space, Juniper Networks. We also had the shares of TripAdvisor falling. One earnings bright spot, though, and there are a few, but one that really stood out was Akamai Technology, shares up about 4% on a big earnings beat. But when we go across all of the sectors, all 11 S&P 500 sectors were down, including the financials. That's interesting only because rates were higher. Typically, that would help that banking sector. But it was truly a risk-off day, and that caused the financial sector to sell off as well, as, again, stocks had their worst drop since early September in Wednesday's Wall Street session. In New York, Abigail Doolittle, Bloomberg News.
Right, moving on to the Asian markets now. It's a positive start in Japan despite the weak close on Wall Street. Bloomberg TV's David Inglis joins us live from Hong Kong to give us a sense as to what to expect today. Morning, David. What are the early cues you're getting?
Yep, all right. Yeah, I mean, what's up, right? It's Japan, just about the only market that's getting a bid. But again, keep in mind, it was down again yesterday. I think mostly what we're getting is essentially a follow-through of the downturn that we saw from the U.S. overnight. Abigail was just mentioning there, it was fairly a risk-off session. When you look across and you splice and dice across a lot of these markets that are open at the moment, 50% of the blue chips are actually down. You're getting a bid across maybe 28%. The rest are essentially unchanged or trading sideways. So you do get a sense of, it's not exactly a rush to the exits because volumes are also quite light, but certainly there's a lot of caution out there. We are entering a very heavy earnings next few days with very, very heavy earnings across most of these major markets in the Asia Pacific. And of course, later on tonight in about, give or take 11 hours from now, will be the key swing factor in the ECB's decision. Will they extend, of course, their stimulus program, and by how much will they reduce that support they have for the economy? Long story short, people are essentially sitting on the sidelines right now, waiting to get more clarity on a lot of these risks ahead. Guys.
Thanks so much for that, David. Let's move to the Indian market now, and Darshan Mehta and Agam Vakil are standing by to give us a sense as to what to expect in India and all that's happened in the futures and options space. Darshan, first to you, morning. Not the best cues from the international markets. Will the bulls manage to keep the rally going, though?
Well, it's expiry today, so Agam will be able to tell you more what's the FNOQ. But it seems that, US was weak, but Asia is not all that bad. I'm really surprised with the knock that's coming in on the SGX Nifty. Let's take a look at how the SGX Nifty is panned out. It's down almost 40 points, probably will be the rub-off effect of yesterday, the big rally that came in. Because if you're looking at it, I'm looking at the Nikkei, I'm looking at the Hang Seng, both seem to be trading with a positive bias. Now, ICICI Bank ADR ended up almost 5.7% higher, so it matched what happened with yesterday. Infosys was up almost 3.4%, reacting positively to the numbers, but HDFC Bank ADR was down almost 6%, as was the cue with what happened with our market. So not the best of the cues coming in. Now let's take a look at what happened as far as crude is concerned. It's trading muted post 2-day gains that we are seeing on the crude front. Metals also, it's rather mixed because the base metals closed mixed on the LME. Certain metals like aluminium was up almost 1.4%, lead was up almost 0.8%. What didn't do well was nickel. Nickel was down over 1% on the LME. Now, if looking at what's happening in Shanghai, steel is down 2%, but aluminium is up almost 0.8%. So very, very mixed set of cues coming in for the base metals from the Shanghai markets as well as LME. Gold is trading strong today. It's gained for the second straight session. Over the past few days, it had seen a lot of weakness, but today it's trading with a positive bias. Let's take a look at the fund flow. So FIIs are back in the market. Yesterday, they bought in almost 3,500 crores in the cash market. So that's the big takeaway coming in. We've always seen that, DI is buying and FI is selling. DI has actually decided to book some profit. They sold it, but it was a minuscule amount of 156 crores that they sold in the cash market. Now, as far as what contributed and what the cues were, clearly Nifty closed at record highs. We just missed the 10,300 mark in trade. So positive cues coming in. The close was positive. Nifty PSU Bank index surged almost 30%. I don't remember the last time I saw an index up almost 30%, but that was the case that happened yesterday. Nifty Pharma was rather weak. It was down almost 1.5%. So that's the overall cue that came in. In terms of what contributed to the Nifty moving close to 100 points, the chart will come up and you can see. So basically SBI alone, SBI and ICICI Bank contributed majority of it. So 70 points and almost 70 points each, 140 points was contributed because of these two banks. Axis Bank contributed, L&T was doing well, others. What didn't do well were the private sector banks and the NBFCs. So HDFC Bank, HDFC, Kotak, IndusInd, and the others probably will include companies like the Bajaj Finances and the other NBs. So overall, it was a day in which the PSU bank shone, but there was a lot of selling that happened otherwise. But Agam, what's the FNO cues indicating currently?
Well, Darshan, with the strength that we saw yesterday, rollovers have picked up. So when it comes to the Nifty, as you can see here, we have seen a gain of as much as nearly 90 points, and that has also brought about a lot of fresh longs building in. Now, this of course is the October futures picture, so you will naturally see some amount of unwinding considering it is expiry. But when it comes to your accumulation across series, we have seen substantial accumulation, and that's the case for the Bank Nifty as well. The Nifty Bank moving up by as much as 3.4%, a substantial up move. But let's move on to the other key variables. Then we're looking at the India Volatility Index as well, which has moved up around 1.5%. Surprising, considering we have seen all the benchmarks move up as well. But this is also on account of an expansion in a lot of options premiums. Now, moving in, as far as the put call ratio is concerned, that stands unchanged at 1.6. Rollovers, as I was mentioning, until yesterday or day before, rollovers were much lower than its previous 3-month average. But for now, considering a rollover stand at 44% a day prior to expiry, this is very much in line with the previous 3-month average. What else happened in terms of option changes? There you go. Given the fact that we saw the Nifty move substantially above the mark of 10,200, we had unwinding in the 10,200 call and unwinding in the 10,100 call as well, but more writing in the 10,300 call. So we may see a little bit of resistance, if at all, in today's job trade around the mark of 10,300. Let's also take a look at what's happening in the band. Naturally, because of so much movement, RB Infra has moved into the band. On the other hand, two counters move out. So we have the likes of BEML as well as HDL all both moving out. We can expect a little more activity. We'll have to wait and watch whether or not they continue to be on ban after expiry as well. PNB, of course, and again, this is showing you the October futures. There's been some substantial amount of accumulation. It's the same for Bank of Baroda as well as SBI. the big three banks have seen the most accumulation towards fresh longs, and that is also what we will be watching out for, Alex, in today's day of trade.
Absolutely, and you'll be back later today at 10:30 to tell everybody more about the F&O space. That's the special F&O show that Agam Vakil anchors with Navneet Saluja. But let's take a check on the rupee and the bond market now. Saloni Dhanuka joins us. Morning, Saloni. What do you have for us?
Good morning, Alex. So, talking about the Indian rupee, it rebounded 18 paise yesterday to end at a fresh 1-week high of 64.90 levels against the US dollar. Now, forex market sentiment remained shaky throughout the day. However, rupee shrugged off initial volatility after local equity markets hit a record high. Now, rupee was the best performing Asian currency yesterday. It was majorly supported by government's move to recapitalize bank, thereby supporting growth in the economy. Dollar rupee is now trading at 64.85 levels against the US dollar in the non-deliverable forward market, indicating a marginal stronger opening for the Indian rupee in today's trade. Now, speaking about the bond market, the 10-year benchmark treasury yield ended 3 basis points higher at 6.81%, its highest level in over 6 months. And finally, global funds increased their rupee debt holdings for the second consecutive session yesterday. They infused close to 270 crore rupees according to NSDL data, Alex.
Thanks so much, Saloni. Now, if you were tuned in from the start, you must have gotten some cues from Darshan Mehta about the commodity space. But for a little more detail, Jayesh Khilnani joins us now. Jayesh, what are you picking up?
Morning, Alex. So we got the EIA inventory report on the US crude oil inventory. So that was actually, it came unexpected. We are expecting a decline of about, it came at about 6.5 lakh barrels per increase for the last week. So WTI has stabilized around the 52 mark, and Brent is also trading above the 57 mark. However, on the other side, the gasoline inventory was down more than 5 million barrels last week. That was in line with expectations. But GMP First Energy has a target price on WTI of about $59 for a barrel by the end of 2018. Moving on to base metals, as Darshan also mentioned that they were mixed on LME. So we had copper posted its first drop in about 3 days, and Dalian iron ore also dropped for a third straight day. So a similar impact can be seen on the Shanghai Futures Exchange, where we are seeing mixed trading on the base metals. Moving on to gold prices, the gold futures rose for the first time in about 3 days. Now that is backed by the dollar and the loonie, which have seen some bit of decline come about ahead of the ECB meeting later in the day.
Thanks for that, Jayesh. Now, I want to talk about HUL, of course. That was a big earning from yesterday. But before we get to that, let's talk about some of the other results that came out yesterday. And let's go across to Darshan Mehta to get a check on all those earnings that transpired post-market hours.
Well, Alex, a lot of earnings came out. Most of them were pretty much stronger. If you're looking at, if you can just pull up how they panned out. So in the strong numbers, you had counters like RBL Bank, PNB Housing, EIL, Questcorp, Agro Foods, Everest Industries and Syngene. Mindtree and HUL were in line, but on the weaker side, you had Exide, M&M Financial, PI Industries, Tata Communication and Aztec Life. Let's take a few of them. Let's talk first about Engineers India. Very strong set of numbers. If you're looking at it, sales were up 27%, profits were up almost 25%, coming in much higher than anticipated. Margins coming in at almost 26%, 32% versus our estimate of 26%. Basically, a lot of cost controls was done by the company, and they got a deferred tax credit of 14 crores. But even if you take all that, the numbers are stronger than what the street was. Syngene came out with a strong set of numbers. Syngene, Everest Industries, was the second one. Everest Industries, if you're looking at it, 7% up as far as top line is concerned. Net profit was up almost, it come into a profit from a loss last time around. Cost controls and, if you're looking at it, the finance cost is half. So Everest Industries, strong set of numbers. Syngene revenues were up almost 10%. If you're looking at the profit that came out, that was up almost 2%. 64 crores was the estimate. It's come in at almost 77 crores. Margins coming in at almost 34% versus our estimate of 32%. So margins are, EBITDA margins are at 34. I apologize. This is the margins have been at 34% from 33%. If looking at Exide came out with a weak set of numbers. There was an exceptional loss this time around, and that is why you're seeing this exceptional item. That is why you're seeing this 25% drop that came in. Revenues were up almost 23% for Exide. Commodity prices are something that actually impacted the margins for the company. Even if you take the revenues were up, given the fact that the price increases that the company has taken. M&M Financial, weak set of numbers. The NPL was shifted from a 90 DPD to a 120 DPD, so that is something that impacted. NI was up 16%. And they had to do additional provision of almost 247 crores given the RBI mandate. And PI Industries, weak set of numbers. Revenues down 2%, profit was down almost 21%, EBITDA was down 5%, margins coming in at 21.7% versus 23.4%. So overall, if you're looking at the numbers, Alex, more of them were on the stronger side rather than the weaker side today.
Thanks so much for that, Darshan. Well, that's a wrap on most of the earnings that came out post-market hours yesterday, but there's still one big company to talk about, Hindustan Unilever. It delivered a strong second quarter, surpassing analyst estimates on all counts. Agam Vakil is here to summarize the quarter for us. Agam, is volume growth the big headline for you?
It certainly is, Alex, but we also must remember that this is on a very low base in comparable quarters. But that said, yes, a 4% growth in terms of volume is taken as a positive. But let me start off with the headline numbers. We've seen 6% growth on its top line. Its EBITDA margins have expanded to around 19.7%, with profit also looking at a substantial 16% growth, on the bottom line. And that's where the big beat is coming in. But this is largely on account of your expansion in gross margins. But that said, when it comes to, the various raw materials costs, in fact, raw materials costs as a ratio to the revenues have come off, and that's where you're looking at an advantage coming in. A lot of their products have started to see the advantages of premiumization come in. So you have your home care and personal care, which has seen a steady growth. Of course, we do not have the comparable numbers for revenues, but when it comes to EBIT, that is your operating profitability for both these segments, they've done very well, and we've seen substantial growth. So on the whole, it's been a steady quarter for HUL, and we'll have to wait and watch as to what analysts make of these numbers, but it is likely to see a positive opening today.
Thanks so much for that, Agam. Now, Yes Bank is the one Nifty company that will report its September quarter's earnings today, and the street is expecting a healthy set of numbers this time around. Shraddha Babla, who tracks the counter closely, joins us now with the estimates. Shraddha, there's also the commentary on the RBI fine to talk about today, though.
Yes, of course, that's the latest that the street will be watching out for. But broadly, in terms of the numbers, we should continue to see the kind of 30% plus sort of earnings and loan growth trend that we have been seeing for the past few quarters for Yes Bank. In terms of key numbers, net interest income is seen growing by about 29%. Net profit is seen growing by about 29-30% to 1035 crores. Net interest margins are also likely to remain within the 3.6 to 3% sort of a number. Loan growth expected to come in at a strong 30% on the back of refinancing opportunities and strong growth in retail banking. Asset quality again expected to remain steady. The gross NPA number in the June ended quarter stood at 1%. So this bank has been outperformed as far as the asset quality numbers are concerned. So we should expect this trend to continue as well. And of course, more importantly, it will be important to watch out for the traction in the CASA ratio. That is a retail strategy on assets and liability sides, and also the management's guidance as far as the exposure to the top 40 or 50 RBI's account is concerned, because that's where the incremental stress has come from in some of the other banks. So that's going to be what the street is going to be watching out for. But broadly, as far as the past trends are concerned, they're expected to continue into this quarter as well, Alex.
Right, Shraddha, we'll leave it at that. On to the stock of the day now. Everest Industries has delivered a robust second quarter. Nikki Marchandani is here to take us through the key highlights. Morning, Nikki.
Hi, Alex. It's the third straight quarter of profit for this company, but then YOY, if you see, there is a different picture. It was a loss situation, a corresponding quarter of the previous year. Just to quickly run you through the numbers, revenues have gone up by as much as 15% at rupees 259 crore for this quarter. Net profit, the company has delivered a profit of around 4.5 crore as compared to a loss of nearly 8 odd crore in the corresponding quarter of the previous year. EBITDA, for that matter, has come in at 11. There is a profitability even on the operating side of the business. It's come at 11 crore as compared to a loss of nearly 3 odd crore. Margins at 4.4% this quarter as compared to a negative figure that we're seeing for the previous because of the loss-making situation there. So what has led to this impressive set of performance on YOY basis? Well, the company operates in two divisions, that is the steel building and the building segment. There is an 18.5% jump that we're seeing from this from the steel building segment, which has led to a good top line performance. Also, the building products contribute nearly to 58%, and while the remaining 42% has been contributed by the steel building segment. If you look at the decline in other expenses, that's come down nearly by 20%, which has in turn led to the operational efficiency of the company. This combined with the lower depreciation, interest rates and taxes have led to a decent show on the bottom line front. If you see the finance costs, they've almost halved to nearly 2.07 crore as compared to nearly 4.9. Nearly roughly around 5 crore in the corresponding quarter. Debt, for that matter, has also been systematically reducing for this company. It's come down to 160 odd crore as compared in this first half of this financial year as compared to nearly 198 crore in FY17. Just to give you a little bit, as I just mentioned earlier, it's a leading building solution company, has a market capitalization of around 737 crore. If you look at the stock performance, it's a decent run up there. YTD, the stock has run up as much as 49%, and if you see on a yearly basis, it's a registered gain of more than 100%, Alex.
Thanks for that, Nikki. And Saloni Dhanuka is back now with the big brokerage calls of the day. Saloni, over to you.
So, Alex, firstly, CLSA maintains a sell rating on Tata Motors. However, they have hiked the target price to rupees 395 from 380 earlier to factor in lower foreign currency losses as the pound remains strong overseas. Now, they believe that demand for luxury auto in the West has declined and has thereby affected their JLR sales. Also, volume growth excluding new models have declined sharply. They expect margins to remain under pressure given rising incentives and weakening product mix for Tata Motors. Now, secondly, UBS initiates coverage on public sector oil marketing companies. They remain bullish on IOC, HPCL, BPCL as well as CPCL with a buy rating. However, they remain neutral on MRPL. Now, they expect earnings to pick up for these oil marketing companies, particularly driven by steady volume and margin expansion. They also believe that government support on free pricing for cooking fuel, that is LPG, should add to earnings growth, and hence they forecast a 12% compounded annual growth rate for these companies over FY18 through FY20 for all these public sector companies, Alex.
Thanks, Saloni. Now, a lot of stocks to watch today. Clearly, earnings is going to be at the forefront, but there are also a lot of stocks in the news. Shraddha Babla has a list of those stocks for you. Shraddha?
To start off with, HDFC Limited will be in focus as the board of HDFC Life has approved an IPO of up to 29.98 crore shares. Remember, this is after the deal with Max Life actually didn't go through. You have Navkar Corp, where the QIP opened yesterday. The float price has been set at 192.29 per share. We'll also have Quest Corp in focus on the back of its earnings, and additionally they've also said that they are going to be acquiring 70% stake in Vedant Cellular Services for as much as 40 crores, not a big number there. And we'll also have Saxoft Limited in focus, where the promoter Sac Industries Private Limited bought about 0.9% stake at the price of 200 rupees per share in a bulk deal yesterday, while investor Ajit Thomas sold 1% stake. So these 3-4 names to watch out for.
Thanks for that, Shraddha. Now, with the government announcing big schemes to boost the economy and spur growth, the question that remains is if the government's booster shot will be enough. Now, my colleague Tamanna Inamdar yesterday spoke to the Vice Chairman at Niti Aayog, Rajiv Kumar, to discuss this in further detail. And she started by asking if this is basically a fiscal stimulus. Listen in.
as the Secretary Department of Economic Affairs made very clear, the government intends to stick to its fiscal deficit target and work towards a 3% fiscal deficit objective by next year. And so there is no attempt, or there is no indication that the fiscal limits would be breached. So a fiscal stimulus normally means when the government gives a go-by to the fiscal target that they have. What it is are a series of measures to strengthen the recovery which has started, and it's not also, Tamanna, an attempt to pull out the economy, but it's more efforts to boost the economy and its productivity levels and improve the supply side response at a time when the economy is beginning to recover on its own steam. So it's certainly not a fiscal stimulus, no.
Chief Economic Advisor Arvind Subramaniam today has said that is one question. Should the stressed assets be taken off the balance sheet first? Also the other big question of which banks need to be targeted first. Your thoughts on both those points?
Well, some stressed assets have already been taken off. 1.25 lakh crore worth of 12 accounts have been referred to the NCLRT, and that's there. If there is any, I haven't seen, and I won't recommend reference to taking off these stressed assets and putting them into a bad bank, if that's what's implied, because that's the track record of that, especially if it is in the public sector, is not so good in this country. So there is a process in the Insolvency Act to get rid of those assets, and I think that process is robust enough to get on with it. And the second question was on what to do with the what was the second question, Tamanna?
Which banks, in your view, and I know it's going to be a tough ask to get some names out of you, but in your view, which banks or which kind of banks do you think should be targeted first?
I had indicated that already in my earlier answer, which is that there would be a differentiated approach, and banks, especially banks where the net worth has been completely eroded, would surely have to be looked at differently, rather than treat them with the same brush as the larger, more viable and more efficient banks.
Interesting comments there from the Vice Chairman of the Niti Aayog, especially the part about the bad bank. Now, you'll find all the live market action on Bloomberg Quint Live, but there's a lot of interesting stuff that you can read on the website bloombergquint.com. Here are some of those stories. The Supreme Court declined to allow Jaiprakash Associates to sell the Yamuna Expressway to pay the 2,000 crore rupee deposit for JP Infratech's home buyers. However, it allowed the beleaguered player more time to deposit the amount. JP Associates intended to raise 2,500 crore by selling the expressway, which would be used to refund flats or give refunds to the home buyers. Now, US President Donald Trump has said that he has no intention to appoint National Economic Council Director Gary Cohn to the position of the new Fed chair. Sources said that Trump wants Cohn to remain in the White House as he is doing a great job in his current role. One of India's oldest general insurers, New India Assurance, has set the price band of 770 to 800 rupees per share for its 9,600 crore IPO. The IPO, which opens on the 1st of November, will have the insurers selling 12 crore shares through the offer. The share sale will be the second largest this year after GIC's recently concluded 11.372 crore offer. Well, with that, it's a wrap of this edition of Daybreak. All you need to know is up next. Do stay tuned to Bloomberg Quint.